Investors' enthusiasm for Palantir stock is understandable with all this growth we're seeing, over $1.4 billion in revenue for 2021, gaining over 30% growth overall. Palantir is predicted to reach $4 billion in revenue by 2025, extending the current growth. But of course, sales forecasts barely ever tell a complete true story. This is, after all, a company with an accumulated loss of nearly $5 billion at the end of 2020, inclusive of a nearly $1.7 billion loss in FY 2020 alone. Nowadays, the company seems like the most impressive stock to buy, and in this video, I will break down everything you need to know about Palantir and whether or not you should invest in the company. Before you get into the video, do me a favor and hit the like and subscribe button. Without further ado, let's get right into it. Palantir's price-to-earnings ratio data is 169.49. Presumably, this is an adjusted earnings estimate, as Palantir reached an income of around $104 million at the end of 2020, specifically using adjustments to back out stock-based compensation and employee payroll taxes. It seems unlikely the company will turn an accounting profit in 2021. I choose to compare Palantir with IBM, Amazon, and Microsoft, as these three firms also have strong relationships within the government sector. Each works with Palantir to varying degrees. They accordingly simultaneously cooperate and compete. Palantir's journey to their $4 billion by 2025 target will be powered by their flagship applications Foundry and Gotham. The former is Effect, an analytics tool, and the latter is, using an equally simplistic description, a decision support system. I have chosen to segment Palantir's technology into the software and platform layers in the figure above. The company notes that Gotham and Foundry enable institutions to transform massive amounts of information into an integrated data asset that reflects their operations. Users can build on top of these assets to make data accessible and actionable. Palantir's application software enables people, whether they are workers on an assembly line or regular users, to work with data even if they have never written a line of code. It should be added that much of the focus has been directed towards Palantir's software layer. However, the company's performing layer, and specifically its Skylab and Apollo components, should not be overlooked. As I summarize, it is equally and perhaps even more important than the software layer. This idea is discussed further in the next section. One of the company's key engineers explains that Skylab and Apollo have reached a level of maturity that allows them to operate hundreds of installations of hundreds of services and database systems in a mostly automated fashion. The company's deployment infrastructure is flexible enough to allow installations in a variety of different environments and mature enough to be certified under strict process management regimes such as FedRAMP. As with point 1 above, Palantir is not only a technology company wrestling with the types of challenges described here, but as discussed at the end of the previous section, their Skylab and Apollo technologies, which underpins Foundry and Gotham installations, provide another crucial competitive advantage, particularly in regard to the management and maintenance of their software under, in certain cases, unforgiving. Example, downtime, physical remote, military intelligence-grade deployment scenarios. These are enabling technologies that allow Foundry and Gotham to be delivered as software as a service. I think there are a lot of reasons to be excited about Palantir. However, even long investors might want to temper their enthusiasm to maintain a level head when thinking about the company as a long-term investment. Consider, although Palantir may have built a better mousetrap with Foundry, ontology-based modeling is not new. I thought to make this point as I have the impression that some investors think the ontology models implemented through Foundry represent a kind of analytics breakthrough. Ontology as a science has existed, well, basically forever. To offer some perspective, in 2004, or more emphatically, over 15 years ago, I was working for an enterprise software company that developed and released an ontology management system, designed conceptually to do many of the same things Foundry is designed to do. Foundry, of course, is a modern technology and light years beyond what my former employer attempted to bring to market. But investors should not hold a false illusion that ontological models themselves are some kind of radical innovation. Foundry may prove to be a tough sell in the commercial space. Continuing my tale from the previous bullet, the old ontology management system that I referenced proved remarkably difficult to productize. In fact, the product turned out to be more of a consulting service play than a product play because the core software had to be highly customized for a given customer and use case. Paradoxically, Foundry's powerful capabilities may actually prove to be drag on sales as customers struggle to understand its potential. Ontologies are not necessarily the easiest concept to grasp, nor is understanding how a software-based ontological model can be used effectively in a business context. Complicating matters further is a need for industry or process domain knowledge when articulating the value of such application. As I suggested earlier, Palantir presumably already has a network of experts in certain domains to facilitate such involved discussions. However, one expects that the company will have to expand that pool of talent to new domains where it hopes to sell talent, which is not likely to come cheap. This use cases that best fit Gotham and Foundry may be limited. Despite Palantir's claim of a $119 billion net worth, the real addressable market for this platform may be more limited. For example, while a military or intelligence entity may have an insatiable need to parse and operationalize massive amounts of data in highly secure, physically diverse, real-time environments with a platform like Gotham, the same may not be the case for a majority of the customers that are theoretically associated with the company's TAM. Perhaps this helps to explain, as reported by the NY Times, that not everyone is enamored of the product, with Home Depot, Hershey's, Coca-Cola, and American Express all dropping Palantir after using it. Of course, I don't have any details regarding what occurred during those evaluations, but it is conceivable that firms mentioned actually saw value in Palantir's technology, but simply did not have sufficient use cases to justify multi-million-dollar investments. For those investors who are managing to pick up shares below $10, I think that's a good long-term bet. For investors who are thinking of buying in now, I'm less certain and discussed earlier, but I'm inclined to think a small to moderate position is a reasonable strategy in an attempt to capture the growth opportunity. Of course, durability and valuation are two different things. Is a firm's valuation commensurate with its market advantage and potential? Personally, I'm unsure of the answer, but long investors are likely well aware that a number of analysts have set price targets well about $25 per share, which is roughly where the stock is trading as I write this. Perhaps it's worth noting here that the company estimates its total addressable market (TAM) of $119 billion across governments and commercial sectors. Although I always encourage investors to view technology firm TAM estimates with a cautious eye. Overall, I tend to lean towards a cautious bullish long stance on Palantir. In other words, I would be skittish betting the farm here, but I think putting some chips on the table and letting things ride for a while could make sense as one seeks to exploit the growth play. It should be said that I think an investment in the firm, while it remains unprofitable, is necessarily speculative, and I would fully expect PLTR to realize continued losses for years to come, as it will almost certainly incur, among other things, massive stock-based compensation expense to retain existing and attract new engineering and product development talent, the most important resources as I see it for a company like this. Of course, investors like Palantir might consider a pseudo-hedge for their bet. As remarkable as Foundry and Gotham are, the United States and her allies obviously cannot rely on a single company for their analytical-centric warfighting and intelligence systems. While I continue to suspect Palantir has built itself a good competitive moat, do not think that the competition, particularly Microsoft and Amazon, are going to sit still. To end that, investors looking to jump on board with Palantir would consider spreading that investment perhaps with a 50-50 growth maturity allocation, selecting neither AMZN or MSFT as the hedge. Generally, I suspect Palantir's government and military intelligence opportunity is likely to continue its strong trajectory of growth over many years, whereas its commercial push may find more muted reception and more competitive hurdles. In my view, investors are rightfully excited about the company and its prospects, but they should also avoid notions that Palantir's technologies are the holy grail of data analysis. And here is the detailed guide of what's going on with Palantir stock alongside my suggestion on when to buy the stock. Of course, the information displayed on this video may not come out as expected, and that is why I also encourage people to do their own research as well before investing. By doing my research, which is what I do best, I came out with this. Let me know what you think of Palantir stock in the comments down below. Also, do not forget to like, subscribe, and hit the bell icon button for notifications on our future content.